Hello, everybody. Hello, hello. So, just as per usual, welcome everybody here. We can see everybody's comments. So, just so that way I know people are here, you guys are alive, go ahead and leave a comment, state who you are, where you're from. Would love to see that information. Hey, Ron. Great to be here again, of course. Let us know in the comments, guys. Let us know where you're from. And let me know that you're alive, too. That's helpful. Ricky, hey, I just saw you. Hey, Jasmine, I just saw you too. Hey, Joel. Awesome. Well, we're going to jump into it. So what we're going to do is I'm going to share my screen and it'll kind of give us, of course, the title again on our presentation today. Our presentation today is on mastering profitability. So how do you take your marketing strategies, scale them, and use your accounting teams to ensure that you're getting the proper return on investment and it's actually scaling and growing your company? And today we also have a special guest, Molly Shoemaker from RTC Accounting. And Molly's going to join us today and kind of break down the accounting side while I'm able to kind of discuss the marketing side. And together, we're going to be able to kind of talk about how you can actually really scale your business and remain profitable with these different marketing strategies and how you should look at it from an accounting side. So that being said, everybody just give a round of applause to welcome Molly on stage. Hey, Molly.
Hello. Thanks for having me today.
Yeah, thanks for being here. We also got Wade from Denver, Colorado, and Teresa from Claremont. Thank you for joining, guys. All right, so I'm going to add to the presentation, and Molly and I are going to go off to the little corner here, and to kind of give a little bit of an introduction as to why we're starting this particular class. There's so many questions out there of like, how do I actually use marketing strategies to scale my business? How do I remain profitable, right? If I am paying X amount of dollars for a job or for an inspection, whatever I'm doing, how does that actually go into the accounting side? So Molly actually brought this up as a great speaking topic. So we got to give a thank you to Molly for bringing this to our attention and kind of saying like we really needed to talk on something like this. That being said, oh, did you have something to say, Molly?
I was just going to add on to that and say, yeah, we get that a lot. We get a lot of questions on our side about marketing, and we like to incorporate as many conversations between the two as possible because they are so interconnected, but most people don't think that.
Yeah. So tell us a little bit about yourself, and we can go from there.
Sure. My name is Molly Shoemaker. I am the Director of Analytics with RTC Accounting. RTC Accounting is a CPA firm. We've been around since about 2012. We have an entire division that's completely dedicated to the home inspection industry. We offer a lot of additional services beyond the typical accounting services for the home inspection industry, a lot of industry comparisons, KPIs, dashboards, that sort of thing. We do a lot of other industries as well, but we do have an entire division just for the home inspection industry. So we consider ourselves to be pretty knowledgeable in that area.
Awesome. So in the presentation today, let's talk about some of the items we're going to cover. We're first going to talk about how marketing and accounting work together. So I'll kind of start the conversation with how we can integrate marketing to your accounting teams. And then Molly is going to talk about how she takes that information and how we can kind of pass the information back and forth. Secondly, we're going to also talk about how to maximize your marketing return on investment. So I'll talk about some common marketing strategies that we're seeing, how you can really maximize the return on investment from there. And we're going to break that a little bit further into calculating your customer lifetime value. calculating your customer lifetime value is super important when we're talking about scaling your marketing strategy and scaling your business. And Molly's also going to touch on to the accounting side. So using customer lifetime value in accounting, how that should actually look within your books. Next, going into financial planning for marketing projections. So how do you plan for this next year in 2024, what you're going to do with your marketing? And then finally, we're going to end on how much should you budget, as well as how to budget for the new year. So again, talking about 2024, if you are going to implement a digital marketing strategy, how do you calculate your customer lifetime value? How do you maximize your return on investment? And then how does accounting play into that so you can actually plan accordingly? So to start, how do we use accounting and marketing together? Well, one of the first things that we do is we share sales values by source with accounting teams, and that can help with cost breakdowns with your marketing spend. So, Molly, I'm sure, can touch a lot more into the actual breakdown, but one of the important things you want from your marketing agency is going to be some type of report that is showing your sales value by source. So, if you look at this particular report a little bit closely, you can see we actually have the totals, which are going to be located. Oh, let me go back. Which are going to be located right within here. We also have the per lead total and the per quotable lead total. But broken down a little bit further down on this table or even up on this graph, we're seeing by source. So by Google Organic, meaning SEO, we're seeing by Google Paid, by like Google Ads, and then Google Guaranteed, basically what you're getting from Google Local Service Ads if you're running any of those. So Molly, if I was an agency and I was to pass this information to you, what do you do with that?
So we can help to tell you what all your return is going to be. We're going to go into the return on investment in a little bit, but we can help you to plan for how you should be spending in the future. Once we know where you're currently at, we can pull information from your system, get a return, get an efficacy of that. I know you do a lot of those metrics for your clients in particular, but we can also help with that. We can give information to you as well based on where the particular client has been doing business in the past to help really fine tune some of those like very specific Google marketing. So we can say, hey, these are the zip codes that they're already pretty saturated in. These zip codes over here have more growth ability so that you can really fine tune where your spend is at. And then we can work back and forth with that.
I love that you commented on that, especially with like zip codes or where you're currently working at, where your retention is already really high. A lot of the digital marketing agencies that are out there, and I'm sure Molly can touch on accounting companies, but you want to make sure you're partnering with some type of agency that is willing to work with somebody like Molly. And your accounting company, so on Molly's end, they're willing to work with a digital marketing agency. Ultimately, it's a win for everybody when you're able to work together and kind of share that particular information. We look good as an agency. Molly looks good as an accounting company. And then obviously you and your business, you reach your goals and what you're intended to do. So this next page, talking about how to maximize your marketing return on investment. The one main point that I want to drive home here is ensure you can track your leads by marketing source. So here, if we're looking at this little dashboard, this is something we provide at Wolfpack Advising. You might have something similar, or maybe you don't have something at all. Make sure with whatever agency you're working with, you can actually track the leads by source. Here we can see over time how many leads are being generated. And here we can see the type of leads. So we're seeing forms, calls, e-commerce, events, emails, chats, messages, basically any type of medium of contact. We're able to see that lead source over time. And then on the right-hand side, we can see the individual type of leads we're getting over this certain time period. So in this case, it's the last 7 days. Going a little bit further, we want additional breakdowns of those leads. So on the right side, we're seeing the lead by status. So it's important to also qualify our leads. And what I mean by that is making sure that, hey, we're getting, say, 10 leads. Of those 10 leads, are they actually all qualified leads? Can I give them a quote? If yes, then great. Now let's give them a quote. And once we give them a quote, can I actually track a return or a sale from that? So this is what this dashboard is good for. We can see a breakdown of over time, what was actually quotable, what we can actually give a job for, what's still pending or what's not quotable, and then break it down by quote value as well as sales value, and then finally conversion rate. So you can use this to improve ultimately your sales team and also the optimization on the ad side. So we can say, hey, from this Google ad we made for you, 80% of the leads or 90% of the leads are qualified leads, meaning you can give them a quote. And that's really great. If we're seeing, though, that, hey, maybe it's less than 50% or 50% of the leads are not quotable, then maybe there's some optimization your agency can do on their end in order to improve the ad quality. On your end, once you get those qualified leads, how many qualified leads are we actually converting into sales? And that's an important metric you need to track. And then you need to start looking into the specifics of each lead to determine how can you actually improve those numbers. So if your conversion rate is really high, let's say you're converting, 50% of every call that comes in, it's really great. If you're converting really low, what kind of things can you do to improve your conversion rates there? The final thing before I pass it off to Molly here is this is what I'm talking about when we start diving a little bit deeper into the analytics. We want to see a table view of all of our different leads by source. We want to see what's quotable, what's not, and then we want to see the notes of it. So here, if we look a little bit more information on some of these leads that we're seeing in this kind of image, we're seeing what's quotable, we're seeing the quote value, we're seeing the sales value, and then we're seeing the notes pertaining to that order. So for any lead that isn't quotable, we're easily able to tell and say, hey, let's look at the notes and find out why it's not quotable. For those leads that are quotable and maybe didn't convert, let's look at the notes and find out why it did not convert. And then let's look for ways that we can improve those metrics to really maximize the return on investment. And that's where, at the end of the day, we talk about maximizing the return on investment is ultimately where we're coming from, looking at some trends and finding ways to improve our close rates and sales rates. So Molly, did you have anything else you want to touch on here?
Yeah, absolutely. I just want to really emphasize how important it is to know this level of detail. Without knowing the true ROI for each of your different types of marketing strategies, when you come to a downtime in the market, and a lot of people are feeling a downtime in the market right now, you don't know kind of where to turn. So we generally see two things happen during that time. Either people cut back on marketing because they're trying to save cost, or they kind of, I call it the spaghetti rule, where they throw everything they can against the wall to see what sticks. And if you don't know what is really effective, what your particular company is good at, where you need to improve, you're going to end up spending a lot of useless dollars that way. So knowing ahead of time before you get to that downtime, or at least, make sure you're doing it when you're in that downtime, you can really maximize where you're putting your dollars to get the most impact. For example, going back to the one that you were looking at before, knowing where all of those leads are falling off, if it's the quality of leads are coming in, but you're not converting, you can improve the number of jobs that you have, the number of converted clients without spending any additional costs, just by doing some training inside. So it's not a time to really be questioning where you're putting your dollars. This is when you need to really lean into the data and have the data tell you where you can have the most impact in really surefire, proven ways.
Thank you, Molly. And absolutely great point. One of the quick insights that I can tell you from a digital marketing agency standpoint and listening to all these calls is a lot of times for those companies that aren't getting the return on investment they need, there's usually just one or two small adjustments you can make with either your phone system or how you're answering the call in order to really scale and close a lot more. You'll be surprised how small little things can actually turn off a potential customer from just hanging up and calling somebody else. So this is where it's super important to make sure that you're actually diving into some of these analytics on your end and talking with your agency, talking with your accounting company to make sure you're maximizing that return. Okay, so let's get into some of the next steps here in our next slide, which is tracking other marketing campaigns. So in some of the slides that you saw previously, we're seeing from online sources how you can track return on investment through like a nice little dashboard. And that's going to be done through like call tracking numbers. That's going to be done through JavaScript on your website. So next up, how can you track other marketing campaigns? Well, first, you need to make sure you're setting up tools to track ROI on those different marketing campaigns that you're doing, such as postcards, TV ads, or billboards. So, for an example, if you're running some type of billboard, you can use a call tracking number for that. If you have a postcard, you can use a call tracking number on the actual postcard itself. And you can also use QR codes a lot. QR codes can just be placed either on, say, the billboard ad or, say, the postcard, or within even TV ads, which we're starting to see a lot more of. That goes to a unique URL, or basically a unique landing page on your website where you can track the visitors. So you know that, hey, visitors on this landing page came from this type of advertisement. And then you can integrate into that lead dashboard. So that way you can easily say, hey, from this postcard series that we did, we know we had 100 visitors on that page in the last 30 days. And of those 100 visitors, we have a 10% conversion rate into sales, meaning that 10 people actually converted into sales. So thinking about your marketing strategies in that way is really going to help you start to think about how can you scale that marketing spend and spend, say, $10,000 on it, knowing that you're going to get the return on investment. So make sure you're also considering the effectiveness of a marketing and growth rep. So a lot of times we hire a marketing or growth rep or somebody that's supposed to be in sales, but we need to consider items like salaries, fuel, food, coffee, and Molly, I know you probably see a lot more of this on your end. So please take it away from me and talk in detail about that.
Yeah, when people talk about how much they're spending in marketing, a lot of times we hear them discuss the costs of the postcards, the billboards, the digital spend, and they completely forget about the people component of it. And people are a huge resource, both obviously in cost, but also in time and training, and they are the face and brand of your company. So making sure that those are the dollars that you want to spend there and that you're tracking them as marketing. That means all of their salaries. It means everything that they're doing, and being able to track how many visits they had, how many of the agents that they talked to on those visits converted, what is the lifetime of those. Being able, if you have multiple marketing reps, being able to compare the customer lifetime value of rep A versus rep B can really give you insight and find best practices even within your business. What is agent A doing different from agent B that's able to retain customers better? So you can learn a lot from the information, but you have to make sure that you're set up in order to track it. Make sure that you're really looking at everything, the entire cost of it, as part of your marketing spend, and treating it as such, as marketing dollars.
And Molly, just to ask a question pertaining to that, when you start working with companies, do you ask those leading questions to understand like whose salaries are being assigned to where?
Yes, absolutely. So one of the first things we do is we get a full payroll roster and put each of the individuals on that payroll into the correct division. And a lot of times with smaller businesses, one person might wear multiple hats. So it might be a person that spends 25% of their time doing administrative work and 75% of their time in marketing. And so we can even split up the costs that way to make sure that we're really fine-tuned accounting for all of those dollars.
Awesome. Okay. So let's talk on one of the big items, which is customer lifetime value. So first off, what is customer lifetime value? Customer lifetime value is the total dollar value over time that a customer is bringing you. Pretty plain and simple, right? But let's go into some of the actual examples of this to make sense of it. So an example of this is a subscription-based company that may earn you $20 a month, right? And if the average customer churns or expires or cancels at 10 months, then your average customer lifetime value then is $200. Going a little bit further with a home inspection company as an example, it's more important to track the agent lifetime value because your agents in some ways are also like your customers. They are your referral partners. They are referring you a lot more business. So how do you track the lifetime value of an agent? Well, if an agent on average refers you 3 home inspections, then you're earning an average of $500 per inspection, then the value of any new agent is $1,500. I will say the home inspection industry really needs to start thinking about this. A lot of home inspectors are trying to go direct to consumer, which there is no issue with that whatsoever. However, when you're going business to business or direct to these agents, you need to think of your spend as, when I acquire a new agent, what was the cost of that? And what is the value of that agent over time? And I know Molly is also going to talk a lot about the analytics when it comes to your ISN and making sure you have duplicate contacts. So, Molly, tell us a little bit more about that.
Yeah, in order to be able to track this very effectively, you want to make sure that you're consistently putting the information into your system. Whatever system you're using to track, it could be Spectora, it could be ISN, could be Keystone, whatever you're using, make sure that you're very consistent with the information that you're putting in, and you're putting in all information as often as possible. I'm pretty frequently asked to pull information to say, how many different agents did I use last year? How many inspections has this particular agent done? And sometimes it can get really messy. I always hate to have to go back to the client and say, I can't really get you that information, but they might have Bob Jones as one of their agents, and it might be in there as Bob Jones and then Robert Jones and then R Jones and then the Bob Jones agency. And each one of those has a name. And without manually going through and aligning all of those, which is very manual and very costly to do, it's very hard to get good information. If you're not consistent, what you might be doing is actually having a higher customer lifetime value than what you think you do, because the one person might be in there 3 or 4 different ways, but really it's all the same person. It's all a big return on your investment. So the ideal is always to have data as clean as possible to be able to get you the best information as possible.
I will say, from just a second point of that, some companies might say, like, well, I don't have the time to do that. Or, when we're taking orders, our office team is entering that. It is really, really worth it when you actually clean the data, like as Molly has suggested, because without cleaning that data, you are not able to make the data-driven decisions you need in order to scale your business. So if you really want to take that seriously coming into the new year, make sure you're spending that time and you have some checks and balances with your office team, because we know humans make mistakes. So set a recurring time on your schedule, or maybe every month, every week, you have a team or a set of eyes that kind of double checks. Hey, make sure I don't have any duplicate contacts, make sure our emails are correct, and make sure we're putting in the right referral reasons with an ISN or Keystone, whatever system that you're using. So how should you use that customer lifetime value with accounting? Molly, is this your slide? Are you supposed to take this one over? Is this me?
I think that one's you, but I'll help wherever you want.
Okay, I'll take it. Using customer lifetime value, you can project the total revenue earned from acquiring a new customer or agent. So ultimately, if hey, I spent $50 to acquire this new agent, I can estimate from there in the future what they're going to give me on average for revenue. So I may have spent $50 to acquire that $500 inspection or that $500 job, but instead we need to change our minds and to think, okay, I acquired that new agent from that inspection that was $500 for $50. That new agent, if I can improve my retention rate, I can get 4 inspections on average. Let's say we're working to improve our agent retention with our marketing team or whatever else with our automated systems. Well, at that point, that new agent is actually worth $2,000 over their lifetime. So I just gave this as an example, but looking into the numbers of it, if it takes $100 in marketing spend to acquire a new agent or a customer, and the average lifetime value is $1,500, then your marketing spend is actually like 6.7% of your expenses per customer. So alternatively, you can think of that $100 in marketing spend you got to for that one inspection. Well, it's actually closer to $33 per inspection that you're getting over the lifetime value. So this can ultimately just give you greater insight into how much you should actually be spending on acquiring a customer or agent, or if you're unable to scale or grow your business on those particular numbers. if you're talking to Molly and Molly's telling you, hey, from an accounting side, you don't have the budget in order to spend that kind of money, she's going to be able to look in those analytics and tell you. So, Molly, could you touch on that a little bit? Like, how do they actually take those numbers? How do they actually scale it from your end?
So this is going to come in into play a lot when we talk about budgeting in a little bit. But we're going to know what you're typically spending on a new agent, and also kind of what that customer lifetime value is, to figure out what your effective customer acquisition cost is, to be able to project. We just about everybody has some idea of what they want to be doing in 2024. A lot of times that might be the number of inspectors or the number of staff that you have. It might be a dollar amount. It might be a percentage growth from this year, but that almost always comes back to revenue needed. And that revenue needed, if it's more than your current revenue, has to come from somewhere. So the marketing has to be spent in order to acquire those new jobs. And knowing what you're trying to get to, how many different new agents, how many different new jobs is going to have to come from this to be able to build out your marketing budget. So it's a big kind of algebra. I know nobody likes algebra. I hated algebra, but it is kind of a big algebra problem. And that's why you can hire an accounting company to do the algebra for you. But once you have all of the variables of the equation, the cost of acquisition, the number of jobs that you want, the number of jobs that you have, then the rest is very simple to just calculate. The harder part is making sure that you're tracking the data ahead of time in order to be able to get the information.
So now let's segue into Molly. I know these are yours. These ones aren't mine. And this gets into your budgeting comment. So how much should you budget for marketing?
Yeah, we always tell everyone the standard for most service-based companies is about 10% of your revenue. So it's often that's for a more stabilized business. If you're trying to do some pretty aggressive growth, it's going to be higher than that. But the idea is that if you're spending 15 to 20% on marketing in order to get more revenue, that once that stabilizes, you end up back at the 10% of revenue percentage, that it always should kind of level out to 10% in a kind of a static position. So start with kind of the 10%. And then when you're looking at growth, this is what I was referring to before, you need to know how many new clients you're going to need to acquire. So how often do your agents have multiple inspections? Do they do an average of 1 or 2 or 3? That's going to tell you how many new clients you have to get. And then you probably need to spend between $50 or $100 for each new client. Now, that's not the whole cost of acquisition. That's just the initial obtaining of that client. Different markets, different programs. So a lot of times if you use like an Angie or a Yelp, it's going to be more on the high end of that $50 to $100. But even that varies a lot based on where you are in the country. Where it can get more variable is when you're talking about digital. It can be a lot cheaper, but it can also change a lot. And even from season to season, you're going to be able to get a different quality and different range of leads from digital marketing in May and June than what you are in December and January, just because there's such a difference in who's out there trying to buy a house during those times. So note that the $50 to $100 is going to be variable. And I always like to budget a little bit on the conservative side and to go a little bit higher. But if you have good data, if you're already using someone like Aaron to be able to project this, you're going to know what your typical customer acquisition cost is. You're going to be able to, this is that formula. It's a lot easier to kind of calculate it when you have those numbers already. And if you're not already spending 10% of your revenue, I'm not telling you need to go spend more than what you currently have. If that's an area of strength for you, that you have some really good relationships, that you've already developed, you have a really good reputation, that's going to save you some money. Even in building, you might already be turning away some jobs. So you may not have to add as many or as much cost in those situations as what you do if you're just trying to organically grow and people aren't already knocking on your door trying to get some business. So it's a little bit of knowing where you are and what you have already built intangibly in your area to be able to fully build that out. Cost of a word of mouth is always going to be so much cheaper than having to go out and find that lead somewhere else. So investing in your inspectors, investing in your customer service, making sure you have a really good experience for all of your customers, that's actually going to save you in marketing costs down the road. And then as you're building these projections, the first thing you need is to know what you're going to be, what you want to do for 2024. Know your goals, define them very clearly. What is the dollar amount that you want to hit in terms of revenue? How many inspectors or staff members do you want to have? What do you want your market saturation to be? Know where you're trying to go, and then go to where you have been spending. Start with your historicals. Where does that fall in the 10%? If you're already really heavy on the 10% and you're wanting to grow, that's when you really need to lean into an expert and figure out where you can be optimizing. That's where you need to start digging into the ROI of all of your different campaigns and figure out, is it maybe a conversion problem? Maybe you're getting enough leads and you're not able to convert them into actual paying jobs. And then know that you're probably going to be changing some of your strategy too. You can't continue doing the same thing and expecting different results, right? So once you have the historical, once you know where you're going, then go in through and figure out how you're wanting to change. Are you going to be adding new marketing strategies? If you're already doing print, do you want to start doing digital? If you have a rep in the field, do you want to supplement that with something online? And also, if something isn't working or can't be tracked, and maybe you shouldn't be investing time and resources into that anymore, making sure that you're adding and subtracting those from your current spend. And make sure that you have specific ideas of what ROI you should be getting from each of these campaigns and what you're actually getting. Set up your data from the start to be able to measure the success of it, and make sure that you're tracking it throughout the year too. So don't say, I expect to get a 300% ROI on my digital marketing, and then never look at it because you don't know if you've been successful or not. So talk to your marketing professional the whole way through. They're going to be able to tell you based on your experience, how long you've been doing digital, how many different strategies you're working with, to be able to give you an idea of what you can expect and when you can expect it and how much of an impact it's going to have on your business.
One of the things that I'll say is commonality across all industries, across all businesses, is you could be focusing on many different marketing strategies. And as Molly hinted before, the return on investment changes from month to month to month. So 1 month, you might get an amazing return on investment where it's, 10x of what you spent. So if you spend $1, maybe you're getting $10 out of that, right? Or if you're spending $100, maybe you got $1,000 worth of jobs from that. However, they're at the same rate. There are times where maybe it's December, everybody's advertising on Google, right? And you're on Google as well. And during that time, costs increase because everybody's looking, everybody's paying for advertisements, but there's limited jobs available. So we need to consider and look month to month and change our budget accordingly when times are really good, and lower our budget accordingly when we need to save a little bit of money, when we realize, hey, costs are too much over on this particular platform, and maybe shift that to a different marketing strategy or to a different digital marketing platform. Segueing here into our next section, we want to just end with some quick tips for marketing and accounting success. So I have a couple quick tips for marketing success in here, and I'm sure Molly has some quick tips for some accounting success. I'll start with, no, this one's yours, Molly. You're going to start with some tax implications. That's not me.
You don't want to talk taxes?
I don't think I won't be good with it. That's for sure.
This is one I don't like talking taxes very often, but this is actually one category of the profit loss statement that I feel like has a lot of impact on taxes that people don't think about. So, one of the main things that we see people spend, especially those in-person reps, is a lot of food and drink and entertainment. They buy food for the offices, they go buy a bottle of wine, they take somebody out and wine and dine them. So, you're always going to have some of that, but just don't lean too heavily into that if you're trying to maximize your tax deductions, because food and drink and entertainment are often not fully deductible, even if it's a business expense, because the IRS knows that it's a business expense with the little air quotes. So they don't always let you deduct that fully. They often don't let you deduct that fully. Same thing with gift cards. These seem to be an easy way to kind of, shuffle money around. But, and a lot of these, it's only kind of like, well, if you get caught, but I've seen people kind of play that if you get caught and then they get an audit and they get caught. And so watching the gift cards, there's limitations on what you can give to another person and still have it be fully deducted. And if you give too much, then you might hit that $600 1099 threshold. And then you've got to do all this other paperwork, and nobody wants to fill out a W-9 for a gift card that they receive. And so just thinking about things like that. Most other marketing costs are fully deductible. Things like any sort of digital marketing, the consulting that you do for the digital marketing, any, optimizing of your SEO, any website costs, your personnel, all the print marketing, all of your email campaigns, all of those typically are fully deductible. So just making sure there's, I feel like we have two kinds of clients right now. We have those that are really trying to cut costs as much as possible, and those that are trying to maximize all of their tax deductions. So for those out there that are trying to maximize your tax deductions, try to just avoid some of the gift cards and food and drink and that sort of thing, and stick with some of those that are a little bit safer.
I heard, Molly, and you can correct me if I'm wrong, if they gift either you or me a Lamborghini, that's deductible, right?
No, and you definitely would end up getting a tax implication if you were gifted a Lamborghini. Although I would still probably would take it. If somebody out there wants to give me a Lamborghini, I'm willing to deal with the taxes of it.
Just for the record, too, I'll take one as well. All right. So how about how accounting and marketing work together and how they should?
Yeah, I feel like sometimes marketing and accounting are pitted against each other a little bit. And I know that there are accounting firms out there that the first thing that they do when the market turns down is, hey, cut your marketing. So don't try to keep these two separate. Have, as much as possible, have your accounting and business intelligence people talk to your marketing people. At the end of the day, sharing that information, making sure that both sides are getting the trackable information that they need. For us, we're doing a lot of dashboards. So having the all of the source information for where the leads come in, having consistent agent information, all of that stuff is going to help us get better information out to you also. It's this, and at the end of the day, we all want the same thing for all of our businesses. We want the lowest customer acquisition cost, we want the highest customer lifetime value, and we want the best ROI. So keeping these separate isn't going to help. If we can get everybody working together, the best data is going to be shared, and you're going to have the most complete picture of how you need to be making some of these decisions.
I would just like to reiterate how important and how awesome this is to be able to work with an accounting company that wants to have those conversations. I would say, actually, I think last month we actually sent one of our reports over to the accounting company and CC'd them on the report. So that way they can understand kind of what we're doing for the company and where things are going well and where things could improve. So I would say if you're working with a marketing agency, just from my end, they should be fully willing to share with you how to calculate your return on investment, how you can improve your return on investment, and then be willing to share that information with whomever you want to share it with. And if that's an accounting company, they should be willing to do that. If your marketing agency right now seems a little bit like hey, I don't have those numbers, or like I can't share that, or you can't calculate it when it comes to paid advertising. With other digital marketing strategies like social media, it can be a little bit more difficult. But paid advertising, it can be very clear as to this is what I'm spending, this is what I'm getting in return. They should be able to share that information with you. So one of the points I wanted to make is ensure that you can track leads or the effectiveness of the campaign. Going into a couple of the different marketing strategies uh, with social media, as I've kind of hinted at, it's a little bit more difficult. But something like paid advertising, you can absolutely track the effectiveness of the campaign. Any type of paid advertising with digital marketing services, you can track how many leads you're getting and the total effectiveness. So if we look at tracking ROI by marketing strategy, paid advertising, it's just call tracking numbers and web form tracking. The user lands on your website. We can see exactly like, hey, they submitted this form. Here's that lead information. And then you on your end can say, hey, yep, our office team called them back at this approximate time and we converted them into an actual job. Or, yep, we took that call and this was the address they gave us. And yes, we did that job. Search engine optimization, you could do the same thing with call tracking numbers and web form tracking. However, it is a little bit more complicated because it is organic. You're not paying for the lead. So with paid advertising, we can say, hey, go to this URL when they click on my advertisement. And that's an easy way to track and say, hey, they went to our special paid ad URL. So we know that it came from an advertisement. But when you're talking about organic, one of the things that you need to consider is how do you know you weren't going to get that lead or anyway? So if you're paying an SEO company and you got 10 leads last month from, Google search, how do you know you actually weren't going to get those anyway? How do you know that the impact of your SEO has actually improved that performance and driven how many of those leads to you? And it can be difficult to find that particular information because it is organic, because you're not using special URLs or anything like that to track. So in order to do it, you have to look at a couple of other insights. Things like website traffic, making sure that, hey, if I have an SEO company, am I getting an increase in website traffic? If I started with them a year ago and I was getting 100 users a month and now I'm getting 1,000 users a month, well, we know they're doing something, right? And if we know, we can compare that with, hey, compared to this time last year, we're getting a lot more leads from online sources or from Google search, then you know for certain that it is or could be because of that SEO company. You could also look at things like your position tracking for different keywords. For example, if you are in Houston, Texas, and your main keyword is home inspectors, Houston, Texas. Well, if you started with a company and you weren't ranking at all for that keyword, and now you're ranking on the first page of Google for that keyword, you can awfully, or most often, attribute the extra business from that particular keyword from those searches to that SEO company. With social media, same thing. It can be a little bit tough, especially with organic. So when we talk about regular profile visits, right, or people that are liking and commenting on your social media posts, they don't like and comment and then buy a home inspection or buy anything from you. Instead, you kind of have to attribute to retention. So looking at, hey, how many profile visits are you getting? How has your engagement increased? How has your follower count increased? And on any particular social media profile, you can actually look at, of your followers, where are they located? And so if all your followers are located in California, but you are a Florida-based company, well, then that's not really helpful. If you're a Florida-based company and all of your followers and all the gains that you've had are in Florida, then that it is a super good thing. So you can look at profile visits, how many people are going to like your Facebook profile over time. You can look at website tracking like above. So from actually Facebook to your website, how many users are you getting now compared to 3 or 6 months ago? And then finally, the engagement rates increasing over time and follower count increasing over time. That is something I kind of hinted at earlier, but making sure that those two things are increasing over time, because ultimately we're looking for follower counts in your service area increasing and the engagement increasing. And that's how you know you're actually retaining those particular people and staying top of mind. But seeing the conversions from social media is usually one of those things that it's kind of a social first rather than hard sells, unlike paid advertising or search engine optimization tactics. This final one, just on email, SMS, or any other type of marketing channel, is you can track conversions after someone enters a particular campaign or sequence. So if you're running any type of automated sequence, automated system, if you, as long as you keep a record of, hey, this contact received this postcard or received this SMS, we're just tracking, does that contact ever make a conversion after a certain period of time? And usually those attribution windows are between 30 to 90 days. So if you send an SMS and they convert after 30 or 90 days, you can attribute that SMS or that sequence to that particular conversion. One of the things you will have to note about is you need to start talking to your accounting company on this and also your marketing company on this and ensuring that you're actually tracking that information. Because if you just look at, say, ISN or the referral reasons a customer is giving you, more often than not, it is inaccurate information. Customers often lie, do not remember, do not know. Or if they say, Google, do you know if it was a paid ad or not? And they're not going to remember either. So instead, make sure you're working with some type of professional marketing person, whether it's on your team or an agency that can actually track that information digitally. Next up, a notes on marketing attribution, which I hinted at. So this is just, what if someone uses multiple channels to convert? So someone finds you on social media and then clicks on your paid ad to convert. Or what if they click on your paid advertisement and don't convert for another 30 to 60 or 90 days? I do want to talk about this as well, because there's so many different attribution models to work with. And it's ultimately how you attribute your dollars spent in return on investment. So you could say, hey, our attribution window, or what we're counting for this marketing strategy, is 30 days. So if 31 days comes and a customer converts after clicking on a Google ad, we don't want it to count and give that particular channel the return on investment. So these are more advanced kind of topics we're talking about now on marketing attribution. And it's important, very important, to work with your accounting company on this, your accountant, to start looking into those really granular statistics when you start really scaling. Because the last thing that you want to do is you want to be spending tons of money and attributing all that return to one particular channel, when in reality, it doesn't make sense. Molly, did you have any other comments on this?
Yeah, just that I think it really takes both teams working together to get a true solid picture of this, because it is so complicated. And there's a lot of psychology to it. There's a lot of timing to it. But if the marketing agency and the accounting agency are working together, they're going to be able to get you the best information by looking at the whole picture to be able to figure out and track these people. Clean data is going to help. Clean data always helps. There's never been a time where like, oh, the clean data isn't helping us at all. So that is always going to be good. But there's, as Aaron was saying, there's just so many aspects to it, so many different metrics that you can be looking at based on all of the different types of strategies that you're using. There's a lot of components to it, and the two really need to work together in order to be able to figure it out.
So before I take it away and talk about some updates, do you have any closing remarks, Molly?
Just thanks for this opportunity. I get so many questions about marketing and how people should be spending on their marketing. And, we often refer clients to you. Anytime I get a client that isn't getting information about their cost of acquisition, their customer lead, statistics, all of that kind of information, I always want to direct them to an agency like yours, because I know that you give that. Data is so important in this. It's actually why I do what I do, because I was telling Aaron before this, I actually started off as a marketing major, and it wasn't because I like designing things. I'm terrible at any sort of Adobe Photoshop. Please don't let me ever touch it. But I loved the data component of it, really looking at an audience, being able to figure out why they're buying, who's buying, how much it's costing for them to buy. That's what really gets me excited at the end of the day. So being able to factor all of that into accounting, I think, is really such a powerful thing. And that's why I wanted to do this. I think that it's important that everyone's thinking of these two together.
Well, Molly, I have to say thank you for bringing in your insights and coming up with this amazing idea. If you guys are looking for any type of accounting services, be sure to contact Molly at RTC Accounting. Molly, do you have like an email or something? What's best? How can they contact you?
You can just email info@rtcaccounting.com, or our URL is just rtcaccounting.com.
Okay, I'm putting that in the comments so everybody has that email address and that website in case you need it. And of course, if you're not working with Wolfpack Advising, why?
You should be.
You should be, Molly. Awesome plug. All right, Molly, I'm going to remove you from here. You can hang out in the studio, but thank you for being here.
Thank you for having me. Have a great day.
All right, so staying up to date on a few things, couple announcements, couple cool things. You don't need to worry about scanning that QR code. I'm not tracking it for marketing attribution reasons or anything like that, although I really should be. Anyway, a couple of things, wolfpackadvising.com/blog. We talk about all of this stuff in really good detail on our website, on our blog. For example, we talk about the power of marketing automation in a customer's journey. We talk about last touch attribution, right? So I kind of hinted about marketing attributions on this webinar. If you want to learn about some of the marketing attribution types, this is where to do it. And also, some people from our social media team also highlight how you could do your own social media, how to gain followers on LinkedIn, all those little secrets and tips that we have as a marketing agency. They're all available and free online that you can check out. Also, if you are not already an attendee for wolfpacksummit.com or Wolfpack Summit, our conference in Tampa, Florida, this is your little signal to make sure you register. We have a little bit more than 30 days, but you only have until December 22nd to reserve your hotel stay. So you need to make sure you secure that discounted hotel stay. Otherwise, the price is going up for that. And make sure at the same time, you just book your travel plans as well as get your ticket. So you can get your ticket just at wolfpacksummit.com. Make sure you register and then get the hotel block done. Because if you don't, again, the price is going to go up, unfortunately, and that's not something I can control. All right. Next, thank you for attending. Thank you for being here. I appreciate it. We're going to end the stream today here right now. If you guys have any additional questions, be sure to reach out to our team. It's just support@wolfpackadvising.com. And of course, check out RTC Accounting. Her information is in the comments below. And thank you all for being here. I appreciate it.